Could massive cash injections from China's central bank, as well as other central banks, be the reason why markets are pumping hard in 2023? In fact, it looks like global liquidity markets actually bottomed in November of last year. Ever since then, we've seen central banks ramping up the spending. The Chinese central bank injecting $92 billion into the markets just on Friday. Just on Friday. That's insane. And I know the Federal Reserve has been kind of doing a bit of tightening, right? But maybe that's not actually the most important story right now. Maybe the most important story is actually what's happening in China and the money they're pumping into the markets, because global liquidity, if indeed that bottom does stay as November, then we could be on the upward trend here as money starts flooding back into the markets. So even though Western economies might be taking liquidity out of the markets, Eastern economies are putting more money into the markets than is being taken out by Western economies, meaning that globally liquidity is going up, which could be good for markets. We're also seeing it's not just China, by the way. We also have Japan doing the same thing. We talked about these stories before, of course, but we're seeing more of it happening. So this from Reuters, they're saying the explanation for the whoosh higher in risk markets this year may be as simple as surprising eye-popping liquidity from central banks. They're saying the Bank of Japan hoovering up domestic bonds to the tune of $291 billion just in January. Just in January, man. Holy cow, that is a monthly record. Massive, massive liquidity injections going on here. Japan, one of the biggest economies in the world. China, the second biggest economy in the world, injecting billions and billions and billions and billions in the market. In fact, last year, so this is the amount of currency annually issued in China from 2011 to 2022. In 2022, they injected about $2 trillion worth, or 11,000 billion yuan, into the market. So we're seeing a big upswing in liquidity. Also, as Tuomas Malinen points out here over on Twitter, he said, we discovered in early 2017 that China has driven the global business cycle since 2009. We also discovered that China has been responsible for the vast majority of the creation of new money, aka liquidity, for that same period of time. So you can see the chart here. So this is the total with China and the total without China. We see the blue line on top here massively diverging. This means China is driving the liquidity right now in markets. And as we covered in a previous video, we're also seeing China becoming slowly but surely more crypto friendly, which in our crypto specific context really matters too. This liquidity stuff is really, we're talking global here, right? This is the rising tide that can lift all markets everywhere, right? This massive injection of liquidity as China reopens, as China starts flooding money back into its domestic markets, which starts easing supply chain woes, which boosts demand for products, sends more products around the world to help, of course, with inflationary, bringing inflationary pressures down in many cases. This could be a really, really big thing. And we're seeing what's happening in Hong Kong with all these major investment firms and banks rushing to offer Bitcoin products, specifically in Hong Kong, which is China's window on the world, which could really speak well for a big crypto pump in 2023 as money from Chinese markets also enters directly into the cryptocurrency markets. But really, we're seeing this be a global effect, potentially with liquidity coming out of East Asia. Also, Tech Dev points out here that Bitcoin and global liquidity cycles tend to be correlated, right? Every all-time high setting move began after the Chinese 10-year and the DXY closed above the 3-week 20-period moving average that occurred in mid-November 2022. Again, that's the case for the bottoming of global liquidity back in November, and it's an upward trend since then. He says in each case, a major impulse topped 12 months later. Think about that, right? So we just started this off here, so that could mean that midway through the year or later in 2023, we could see that potential topping moment coming in here for markets. We've seen the same many times before, late 2020 into 2021. We saw in 2017, again, back and back and back, where this coincides. So very, very important to take note of this global liquidity situation here. Now, before we get into some specific Bitcoin charts and a few things I want to mention around that, just a reminder, if you don't have an account over on Bybit yet, you need to get yourself one. It's the best place for trading crypto. 0% fees for their spot markets, which is redonkulous. great futures markets. If you use that link down below in the description to join over 10 million traders over on Bybit, then you are going to be able to enjoy up to $30,000 in deposit bonuses. So check it out exclusively using that link down below in the description. Now let's take a look at the Bitcoin daily charts real quick. Here we just faced our second rejection over $25,000. Yesterday, we'll see, of course, how that price action continues to play out. $25,000 currently being a sticky area where we're seeing a lot of profit taking, a lot of selling happening into the moves over 25K. So a very important area for us to be watching. And of course, $25,000 coincides with the 200-week simple moving average, which is the line of lines right now for Bitcoin. This is the line that really determines whether we are in this just crazy buy zone, which has been trading under the 200-week simple moving average, or if we start to move into really that new bullish cycle, which is trading above the 200-week simple moving average. So this is a really, really key line for us here. And I know that the daily 200 also a very, very important line. But remember, we crossed that a while ago. We crossed that on the 13th of January, Friday the 13th. We crossed over that line. And we've been trading successfully above it since then, indicating that this is likely to be a rally that's really got some legs to it, right? We've moved over key areas of price resistance back here from the FTX crash, for example. We've blasted past that. We've blasted past key price resistance from earlier in September. We had the nice breakout. We had the retest of this key area, right, of that key previous resistance, flipping it into support, moving higher off of that bounce. So price action wise, looking at the technicals here, things are looking pretty gosh darn interesting, but still, until we take the 200-week simple moving average, I'm going to reserve my extreme excitement here in the markets, of course, but we are definitely moving in that direction, and I really want to see us conquering that level with some decent volume, and of course, sticking above it for a few weeks to really say that, yeah, this is the real deal and not a damn fake out. I am still thinking that we could see markets rallying as high, just my prediction, of course, not financial advice, obviously, but that we could see markets rallying as high as 48K, which is a very, very key area here for Bitcoin. You can see back from March 2022, that could be our potential topping area for 2023. But let me know your opinion. Do you think we could get up to 48K this year, or is that just some hopium fantasy? Let me know down below in the comment section. Okay, that's it. Subscribe now. See you next time.